Over the past few years, S-REITs have struggled. Rising interest rates, global inflation, and weak market sentiment caused many REITs to drop in value. Investors panicked, yields went down, and trust in REITs took a hit. But here in 2025, something's changing. Interest rates are stabilising. Inflation is cooling off. And for the first time in a long time, we're seeing signs of life in the REIT market. Dividend yields are looking more attractive. Prices are still low. And long-term investors are starting to take notice again. The truth is, many people lost money in REITs over the last few years. Some bought too high. Others didn't understand the risks of leverage and interest rate exposure. And after watching their portfolio drop, they gave up. So here's the big question, is it time to go back in? Let's look at the potential. S-REITs are now offering yields of 5% to 7%, and some are even trading below book value. That's rare. And when interest rates eventually come down, even just slightly, REITs could benefit in two big ways: higher valuations and stronger investor demand. Let me share 3 categories of REITs you might want to watch closely. First, industrial REITs. These own logistics hubs, warehouses, and data centers. REITs like Mapletree Industrial Trust and Ascenda's REIT have been resilient, thanks to the growth of e-commerce and cloud services. Second, retail REITs. Yes, shopping malls are coming back. CapitaLand Integrated Commercial Trust owns places like Plaza Singapura and Raffles City. With Singapore fully reopened, tenant demand and foot traffic are strong again. Third, diversified REITs. These offer a mix: offices, retail, and business parks, sometimes across multiple countries. One good example is Mapletree Pan Asia Commercial Trust. This kind of diversification spreads out your risk. But don't just jump in blindly. Not all REITs are created equal. Some are over-leveraged. Some have falling occupancy. Always check the gearing ratio, the portfolio quality, and management history. And remember, REITs are still sensitive to interest rates. If rates suddenly rise again, it could hurt prices. So manage your risk and avoid putting all your money in one sector. Here's my take: 2025 could be the quiet comeback of S-REITs. It may not be flashy, but if you're focused on long-term passive income, now could be the right time to pay attention. Small price, stable income, big potential. Let me know in the comments, are you holding any REITs right now? Which ones are on your watch list?